going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a wonderful, awesome, beautiful day today. What a crazy week it's been for Bitcoin. Look at this candle right here. Look at this volume that came in, and look at how Bitcoin started to dump. We got all the way down to $18,840 and instantly pumped back up again to this, oh, what's going on with the chart right there? Again to this same level. This is insane, guys. Now, in yesterday's video, we were talking about how we had seen the Bank of England pretty much starting to reverse their stance, saying we need to do anything that we can to save the economy. And maybe that had something to do with the tick up, right? We said maybe this could be causing a chain reaction. Well, guess what? Turns out today, there are in fact more countries that are starting to loosen the reins, whereas the US is still maintaining their hawkish stance. Now, I don't want to just talk about that today. We are going to talk about the Bitcoin price, but really, as far as Bitcoin price is concerned, guys, there's one major thing that we need to do. We're having the monthly close tomorrow, and we need to do this in the next 24 hours, okay? So I will get into that, but there are so many other things happening around the world right now, which is totally crazy. And there was even some data that came out, very strange data, about the US, which is interesting because it's very contradictory to what everyone else has been telling us, right? Also, the fact, just gonna throw it out there, that the GDP did come in negative again, which means that we are in a technical recession, but I'm sure they're just going to change the definition of that again so that we're not in a recession, right? So we're going to talk about all of those things moving forward. What is the Fed going to do? Also, we have Billionaire Stanley Druckenmiller coming out with some pretty interesting commentary, and he did touch upon cryptocurrencies. So if all that sounds good to you today, thank you again for sticking it out in these crazy, wild, insane times. You guys are the troopers. I know the real hardcore subscribers. I see you guys in the comments. Drop a like, drop a comment. You guys are awesome. And if you're new, definitely get subscribed because we make videos. You guys know, bear market, bull market, crab market, doesn't matter. We're here. I'm here. Good to see you. Let's dive in. Let's have a look. Now, this is crazy. This is crazy, guys. So we knew that we were looking for a major pump when we got to the end of this, right? If you were following the channel, we called that. We did. But what ended up happening was we came up, instantly had the Bart Simpson back down, but have a look at these technicals. Look at these lines right here. And we have not moved any of these lines, right? This is where we kept having that resistance support area. And look at exactly where we had that wick. We missed it by literally a couple dollars to the downside, instantly got bought back up, right? This is showing that people are in fact buying Bitcoin. Who's buying Bitcoin? I do have some data on that later in the video. You're going to be probably, maybe not shocked, but I was interested in what I read. We'll get to that. But you can see right here, first what we did was we retested this support or this resistance right here as support. And then look, this support actually held, right? We actually held above it. And this resistance support held as well. So this is very, very interesting to see Bitcoin reacting this way. Every time we come down to these levels, it is getting bought back up. So yes, if you zoom out, it's pretty bearish looking at the chart, but short term right now, the fact that we're seeing people actually stepping in and buying Bitcoin is pretty crazy. And just to point it out, guys, we have been putting in right here, you could see higher lows. Every time we come down, we touch this level, right? A little wick down to the bottom, but we've closed every single candle above this, and we are slowly inching our way back up towards this downward sloping trend. Now, obviously, once again, we are being held down by this major resistance right here at around 19,457. So what do we need to do? Well, ultimately, we need to close back above minimally this level right here, but optimally, we want to close above the previous all-time high. And you can see we are sitting just a little bit below that. Now, why is this an issue? Well, zooming in right here, look at the close of all these candles right here, right? If we actually just have a look at this. So this red candle, this candle closed at 19,925. That was sitting above the previous all-time high. July closed 23,314. Clearly above the all-time high. August closed at $20,053, above the all-time high. Currently, right now, we have 1 day to go for this monthly candle. And if this candle cannot close above that level, where you can pretty much just see right here, look at this, you can see all these previous candles, right? That's where they closed, right? You can see, or closed and opened, I'm sorry, but you can see they always stood above that, right? Right now, we're sitting below it, okay? That would not be good. That would be the first candle in, 4 months now that actually closed below that all-time high. Now, I'm not saying that would be the end of the road for Bitcoin. Obviously, we would see what happens on the next month. Maybe if we close 2 months, then that's extremely bearish, whatever, but it still is bearish on the short term if we close. So really, we need Bitcoin to rally somewhere between $300 and $600 by the end of the day tomorrow. That would be optimum for Bitcoin, right? That's not the worst case scenario because we still would be closing above the 89 EMA right here, right? This purple line that's been holding us up. We only had this little touchdown here on COVID. So that level is sitting at around 18,240 roughly. So that is, remember in yesterday's video, I said that would be the first thing that we need to do to maintain, some sense of maybe bullishness in the charts, right? But ultimately, it would be even better if we could get above the previous all-time high, right? So that's exactly what we need to do. But as far as trading is concerned, well, I'm going to just stick to the same things we've been saying, guys. Break above this red line right here around, let's just round it to 19,500. Come down here, have a confirmation. Then yes, I believe the next area would be right at this intersection point around $20,753 roughly. And, if we were to go up to that level, of course, we are looking at some major resistance if we are able to break through that. Next level is 21,740. And then the final level, which I think would be the ultimate bounce if we could do it, would be 22,475, right? So those are the trades you could take, right? If we have that breakout confirmation, I would put the first sell at around 20,740. And, as long as you're in profit, you could try to, ride it all the way up to 22,475. If we do break below this and close below this trend, then we are probably heading back down to about $18,000 even. That's the short-term trade that you can take if you want to take the long or the short. Right now, though, we're just consolidating. We're waiting for a move, but it would have been better if we could have closed the monthly. We still have 24 hours. Anything could change, but that is really what Bitcoin needs to do. If not, it's going to send a lot of uncertainty across the board, as to basically what Bitcoin is doing. And unfortunately, if it remains low, then, we are potentially going to have that descending triangle, right? Where you keep getting bought at the bottom here, but you keep making a lower high, lower high, lower high. And then eventually you get to the end of the move, which I guess you could say we could potentially come all the way out to maybe October, maybe the end of this year, October 31st on Halloween, we could have a scary day, right? But that's basically what we're looking at. I don't really want to focus on the charts too much. There's not really much to talk about. The thing we can talk about is that the S&P is literally about to touch its 200 weekly moving average, which, you know what I mean? Once you fall below that, you're definitely not in good territory as far as the stocks are concerned. But there is something we can look at. Now, I don't want to get anybody excited, okay? I don't want to be that guy. But I will say that looking at the DXY right now, if we look at this candle that's forming right here, look at this selling pressure, look at this giant wick right from the top. You guys can see that right here. Do you see how much selling there was on that? Or not really selling, but you know what I mean? Like the pressure from the downside. Now you could say, oh, well, we had something similar like that here. Or maybe even something kind of like this here, even though this was more of a Darth Maul wick. But the difference is that, for example, this candle right here, which did in fact result in a little bit of a downturn for the dollar, that was actually a green candle, right? That candle opened at 106, went up to 109 and closed at 107. Whereas thus far, this candle, and it's not the end of the week, we still have a little bit of time, but right now, this candle actually opened at 113, went all the way up to 114, but is currently now sitting at 112. Right? So this is showing that the dollar could be losing momentum. I'm not going to speculate and say that it is or isn't. Way too soon to tell. This is just a weekly candle. Obviously, if we switch it to the monthlies, a little bit of a different picture here, right? Even though we are still seeing that wick right there. But nevertheless, what does this mean? Could the dollar be falling? Well, I tweeted this over on Twitter, and Watch Guru pointed out that the U.S. GDP falls by 0.6% in Q2, pushing the economy into a technical recession. And right here, this is moving the goalpost, right? That's what they do. They're just moving the goalpost. Oh, it's not a recession. We're going to change the definition of a recession to better meet the situation that we're in and make us look like we're doing a better job than we really are, right? So Dylan LeClaire actually pointed out the fact that Stanley Druckenmiller, he was over on CNBC. He was having a conversation with Joe Kernan, And he was talking about the extraordinary quantitative easing and zero interest rates over the past decade created the asset bubble. I think we can all agree on that. I think we can all agree that that had a lot to do with it, right? He says all of those factors that cause a bull market, they're not only stopping, they're reversing, every one of them. We are in deep trouble. You don't even need to talk about black swans to be worried here. To me, the risk reward of owning assets doesn't make a lot of sense. So these are just another one of those billionaires, right? Now, I'm not saying we should or shouldn't listen to them, but having some cash on hand right now does make sense in the short term. I'm not against that. I have a cash position. I have bids for Bitcoin very, very low. We have one around that $16,400 area, one down at 13,800, 9 if it ever gets down there. I don't know if it will. That'd be the buying opportunity of a lifetime. But he was talking about what was going on with the Bank of England, right? U-turning on quantitative tightening suggests that the Bank of England cannot undo years of money printing and low rates without a crash landing. Wednesday's intervention has only kicked the can down the road, or, in what I said, moving the goalpost. So Druckenmiller suggests that the general public is losing faith in the banking system. With that, he sees cryptocurrency as part of transitioning to a better plan. Now, this is the guy that says he's not sitting in these assets. In fact, he says that he doesn't own any cryptocurrency at all. He doesn't have any. But he does say, I could see cryptocurrency having a big role in a renaissance because people just aren't going to trust the central banks. And I think that, now it was very different years ago, right? Media was different. It was very easy to control. There was only a few sources. But now with the internet, anyone can just go online and do some research, and that's what you're seeing. A lot of people are waking up to the reality that maybe we shouldn't really have as much faith in these central banks as we previously had, because it doesn't really seem like they know what they're doing either, right? He does say, however, that the U.S. central bank has so far stuck firm to its hawkish stance, and he conceded that further pain will likely result, but he just hopes that they stick to their guns. So that is one thing to point out. But here's the interesting thing. When we were discussing who could be buying Bitcoin, well, we had the pound falling to a record low against the dollar on Monday, having plunged the previous Friday after the UK government announced unfunded tax cuts. Now, here's the interesting part of it. The volume of transactions in the Bitcoin sterling trading pair across 8 major exchanges globally spiked to a record high of 846 million pounds, or roughly $920 million. This was according to Keiko Research, compared with an average of around only 54.1 million pounds so far. This is an incredible surge. That's a huge difference. The surge was likely due to traders swapping sterling for Bitcoin, said James Butterfield, head research at the crypto firm CoinShares. There is a high correlation to Bitcoin volume growth and political monetary instability. Now, this is the slowly, then suddenly that we speak about, right? This is where Bitcoin slowly starts to transition into that alternative, right? And also another thing that a lot of people don't talk about is if the other countries are all changing their stance, or, they're doing quantitative easing and the US is doing quantitative tightening, although that is making the dollar stronger. And I'm oversimplifying this. I know someone in the comments is going to have something to say about this, but just explain it like I'm a 5-year-old, right, kind of thing. If the dollar starts getting too strong, it's going to piss off these other countries, right? Because that's going to start, and I'm not talking about like third world or whatever. I'm talking about, countries that, are even in the DXY basket, right? They're going to get pissed off. They're going to start seeing their currency devaluing so much to the US dollar that we're going to see like what's happening with the BRICS, what they're doing, saying, screw the dollar. We're not going to use the dollar. We'll use our own basket of currencies, or we'll just trade using other currencies or other assets, right? We've even heard countries come out and say we might even start using digital assets, right? So I think the U.S. should be a little bit careful with what they're doing. Not that I'm any macroeconomist, what do I know? I'm just a guy on the internet, but I do know that that is a strong possibility. Bitcoin Archive pointed out, central banks, no pivot, no pivot, no pivot. Bank of Japan starts buying bonds. Bank of England starts buying bonds. Who's next? US Fed? ECB? Well, actually, guys, looks like it could be Germany. Because Germany is now joining an array of other nations that have decided the way to ease the pain of government intervention-enabled inflation on their citizens is by throwing more money at it. And in yesterday's video, I said we were going to see a chain reaction. We're seeing it right now. Chancellor Olaf Scholz's administration is preparing to redeploy funds from its COVID preparedness piggy bank, which will be added in order to reach the $194 billion sum that the government believes is necessary to put a lid on soaring gas prices. According to Scholz, he said at a press conference in Berlin, prices must go down. To reach this goal, we are opening a big umbrella. It's happening, guys. It's happening right now. And just the same way that we saw, record volume in the pound sterling going into Bitcoin, we may start to see others turn to Bitcoin as well, especially like Druckenmiller said, if they begin to lose faith in the central banks. Now, I don't want you guys to take what I'm saying today and assume that tomorrow we're going to have like a $10,000 Bitcoin candle and we're going to the moon. Keep in mind that most of the things that happen now, especially with monetary policy, take months to actually see those results, which is almost why, in a way, you could say that the Fed has been a little aggressive in one way and the other way, right? Like when they start printing, they go crazy with the printing. And then when they stop the printing, they go crazy with the interest rates, right? It's too extreme. You're not giving it enough time to actually see how it plays out. So a lot of what we're seeing today, we may not see the effects of this for 3 months, 6 months, who knows, a year, possibly even, right? But you do have some economists over at Wall Street Journal predicted 215,000 jobless applications for the weekend that ended on September 24th. However, that estimate was actually lower than expected. It was only 193,000. So Andrew Aziz, managing partner at Peak Capital, says that the good news is actually bad news for Wall Street, because if we had lower jobless claims than what we had anticipated, then that basically means there's no reason for the central bank to pivot to a more dovish monetary policy, given that it believes the labor market is still strong. And I do want to just have a quick side rant. I do remember about a month ago, or maybe it was less than that, I had made a video where I was talking about how I was not seeing this unemployment and layoffs around me. And a bunch of people in the comments were telling me I was completely wrong. They were like, no, it's bad out here. It's terrible. People are getting laid off. I'm not seeing that. Maybe it's just here where I lived geographically. I just talked to a guy yesterday. He was here working at my house. He was doing some plastering for the top of my pool. I have a leak I had to take care of. And he was telling me that he can't get work. He says he has he's straight up booked to the end of the year. Totally busy. Tons of people paying for work to be done. But he's also saying he can't get people to work. He actually said he ended up calling unemployment and telling them that the guys were basically saying that they couldn't find work and he was offering them work, so they got their thing cut. That's a side story. But we're not seeing that, right? But I don't know. Maybe it's just here. Maybe it's just here. Let me know. I'm genuinely curious. Where are you located? Where are you from? Are you seeing layoffs? Are you seeing people losing their jobs? I'm not seeing that where I'm at. I'm actually seeing people not able to get people to work. I'm not making this up. I'm just telling you what I'm seeing, but let me know. Love to hear that. And also, side note, totally random, but for all my friends in Florida, how are you guys doing? That looks absolutely crazy. If you're in Florida, how are you holding up? I hope you guys are all doing all right. Really, really nuts down there. I always wanted to move to Florida, but that's the hurricanes and stuff scares me. That was enough rant. I'm sure I lost a bunch of you guys. Let's continue. So, despite Russia pushing the idea of using cryptocurrency, sometimes you just got to have fun and just have a conversation, right? Geez, everybody's so serious all the time. Despite Russia pushing the idea of using cryptocurrencies for cross-border payments, the specific digital asset the government plans to adopt for is still unclear. That Russia would allow Bitcoin or any other similar cryptocurrency to be used for cross-border payments is highly questionable because such assets are, in fact, hard to control, right? Let's talk about the good news, though. So we have new legislation aiming to expand the assets that 401ks can hold. The Retirement Savings Modernization Act would also allow fiduciaries to recommend cryptocurrencies. The legislation has the backing of 3 Republicans, outgoing Senate Banking Committee ranking member Pat Toomey, Senator Tim Scott, and Representative Peter Meijer in the House of Representatives. So we're still seeing innovation. We're seeing cryptocurrencies coming to 401ks. Innovation is still happening, guys. It's just everybody's very glued to the headlines of doom and gloom. And as you can tell, I'm not panicking right now. I don't have to be, super ultimately crazy rich by tomorrow. I understand it's a long game and I realize where this is heading. And it's not just a matter of getting rich. It's a matter of preserving and protecting your wealth long term. And you might be saying, well, Bitcoin is down 70%. Okay. Have you seen what Bitcoin does? I haven't even been in Bitcoin since the beginning. I got in 2017, and I've watched Bitcoin go up 90%, dump 30%, go up 200%, crash 95, 85, whatever percent. But nevertheless, guys, we know what Bitcoin continues to do over the long term. Oh, and speaking of, moving forward and creating and building, BlackRock launches an ETF in Europe with blockchain and crypto company exposure. The world's largest asset manager has been increasingly engaging in crypto, having recently announced the launch of a private trust offering direct exposure to Bitcoin. But oh no, guys, not Bitcoin. Don't buy Bitcoin. Bitcoin's a scam. Bitcoin's a Ponzi, right? So speaking of companies that are building, I did just want to give a shout out to Ethereum. So they actually came out with this and said, the time has come. We proudly announce a giant leap forward for the Ethereum protocol. The claims portal on our data DEX is now officially live on the Elrond mainnet, which, by the way, Elrond, I haven't spoke about them in a while, but they are definitely a layer one solution that I think is really credible. These guys, I actually had a chance to meet Benjamin, and they just keep building. Like, they just don't care about price. They don't care about the coins. They are just working on building the infrastructure. And I actually really respect that. And I think, a lot of these sort of fly by night products and companies that you see in blockchains, that are just in it for the quick flip, quick buck, I think these are the ones that are going to last longer. So if you guys are interested, definitely check that out. But this claims portal, they're saying, is going to drive community and ecosystem growth for the protocol. Indirect DAO government distributions of tokens will not be possible without the claims portal, making it obviously a feature that you need. It is the token distribution nucleus for Ethereum's community guardians and ecosystem warriors, and it is now ready for use on the Elrond mainnet via the data DEX. So as part of the mainnet release of the claims portal, we are pleased to announce that the data DEX will support decentralized login via all of Elrond Network's core wallets. So definitely keeping an eye on Elrond. Elrond is one of those, kind of goes under the radar. A lot of people talk about like Solana and Avalanche and all these things, but Elrond, I will tell you what, they have a very serious team. Not trying to shill them, not trying to say go buy the Elrond token or go buy Ethereum or anything like that, but I am just saying that these guys really, I can say, are hard workers, and I do see a lot of potential in Elrond in the future. Obviously right now everything's a little screwed with the prices and everything, but adoption still keeps on going. Just want to do a little bit of altcoin news. I haven't really talked about altcoins too much recently, but getting back to Bitcoin here, you can see we are back in the blue zone, which jokingly I said I should change to the red zone. But ultimately, you really don't want to fall below this area right here. I don't know why I just drew that random line. But yeah, right here, you guys could see we have these two wicks right here at around 17,157. And, if we do go down, that next weekly close is around that $16,157 level. But yeah, we are in the danger zone. And like I said, you can argue that we are beginning to form this bit of a descending triangle. And, like I said, the last time we had, a major descending triangle was back here, and we had a 50% drop. So that's what we're trying to avoid. That's what we don't want to see. But, again, like I said, guys, you could have said that maybe we had something similar here, not so much on the weekly, but the daily. And that went to the upside, right? So the other thing too, as I said, is it does look like we are forming a double bottom pattern, which is bullish. And if we do break this heart line, it could send us back up here to this major downwards trend, which means we could actually possibly see Bitcoin back above $30,000 at some point and still be in a bear market, which is kind of nuts to think. Bitcoin 30 grand, we're in a bear market, right? But that's it for me, guys. Thank you so much for coming back to the channel. I know today's video was a little random, lots of rants and raves all over the place. It's pretty simple right now. Stay above the 89 EMA on the monthly and try to close above the all-time high. Not much else can really be said for the next day, because that's just what we're looking at. And then, once we get that monthly close, we'll start reassessing the chart again, right? But obviously, if you guys do want to trade, if we do happen to have any volatile move in the next day or two, I don't know if we will. I don't know, markets might just remain flat. But if you guys do want to learn how to trade profitably and responsibly, make sure you guys take advantage of the over $16,000 in bonuses below. Make sure you check out those links specifically for you guys, and check this video popping up right here, right now. That's it for me, guys. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.